Everybody, welcome back to the podcast. I'm with Lauren again, and I think we've got a pretty interesting topic that is going to be applicable, especially for those of you who are in that small to medium-sized business and just getting started really with understanding your finances and kind of the slippery slopes and the dangers of running a business from the financial side.
Devon, I'm going to bring up an article. I talked to you about it, or I brought it up to you at least the other day because I wanted to know what in the world happened. And that was, I saw the headline that a woman from Vietnam has received the death sentence in the country's largest fraud trial in their history. And my question to you was, what in the world? How does something like this happen? And surprisingly, you came back and was like, well, it's actually probably, maybe not to this scale, but it happens more often than you think in many businesses. And that's where we wanted to get started here.
Yeah, it really does. I mean, I think it's pretty funny. Everyone's freaked out about hiring more IRS agents. I guess in Vietnam, they just have firing squads, right? But like, this is super common. And what happens is that article, I read a very similar article about the lady, and the article headline was that she used the bank as her own personal ATM, right? Like, and that's what happens. And I think we all kind of gasp and we're like in like shock that this happened. And obviously this is, pretty severe.
Mm-hmm.
But this happens all the time in, the small business world.
Mm-hmm.
And what happens is people from the very beginning are kind of running the company out of the same bank account, or maybe they have two separate bank accounts. Maybe they do have their personal and their business, which is the way you should do it, right?
Mm-hmm.
But, they're using the business bank account for their own personal resources, their own expenses, or they're drawing out profit that they shouldn't be drawing out. And this is commonly referred to as commingling of funds.
Uh-huh.
And Lauren, it is very common. If I had to guess, I'm going to guess that I'm going to say over half of small businesses probably do this.
Uh-huh.
And it's dangerous, right? Like there's all kinds of issues. Not only like, can it be illegal depending on how you do it? But even if you walk like the legal line and don't necessarily do anything illegal, it really makes it difficult to understand kind of the true profitability of your company. It limits your growth. You never understand your real financials. It's crazy stressful.
Yeah.
And there's just issues, right? And it's difficult. And I would say it's probably like the number one thing that I warn new entrepreneurs about, like understanding your cash flow and don't commingle your funds, right? Like, and you're going to avoid a lot of the major financial pitfalls that you could experience.
So commingling funds is not necessarily, doesn't mean people are doing it with bad intentions, or as this woman did, like, illegally. Could be a legal thing, or it could be done with good intentions. It's just people don't understand the repercussions of it.
Yeah, there's lots of degrees of it, right? So,
can you give me some examples of like, even different degrees of like, okay, what is commingling actually look like?
So let's talk about a very legal thing to do. So you have, before you start a business, you have your own personal vehicle, okay?
Mm-hmm.
You start a business and all of a sudden you say, you know what? I'm going to have my business pay for my vehicle, and it's now a company vehicle. Okay. Maybe it's still in your name, so you reimburse it, and and there's that's legal. There's certain portions of that you can write off. Like you can't really write off 100%.
Yeah.
There's rules that you have to follow that your accountant at the end of the year can help you follow, right? So that would be kind of a legal picture of it, like a very, easy kind of, and then do you use gas while you're using gas? So you got a company gas card and you do it. But then, so now let's talk about how it gets to be a slippery slope, right? So now you have this company gas card, right? And then all of a sudden you hand the company gas card to your wife for her vehicle, right?
Yeah.
Is really not part of the company, right? And so now all of a sudden, literally, we've crossed the line there, right? That's not company expenses. Technically, like you're deducting something as a business expense. It's not a business, right?
Yeah.
So,
Yeah.
and then you have these like gray areas. And this is where lots of small business people like to walk. They go, well, I want to deduct as much as I can. So I'm going to call a portion of my house an office. Okay. You can probably do that if it's really your office, okay. Or, hey, you know what? I really want this $500,000 boat,
Mm-hmm.
I really wish my company could pay for my boat, right?
Mm-hmm.
And they're like, you know what? I take out my son who kind of works for my company part-time. So I'm taking out an employee on my boat, right? And so they start to like bury these expenses, thereby lowering the profit, thereby lowering the taxes that they pay at the end of the year.
Okay.
And so like these are things, these are great. Some of them are black and white and you flat out can't do it, right?
Uh-huh.
Some of them border on the gray. I'm going to say are more dark gray, honestly.
Uh-huh.
And then you, like I said, you do have the stuff that's like totally fine, right? Like you have a car, you do have, office, like stuff that's like totally legal, right? That's fine. But unfortunately, the small business world gets very caught up in this, right? And so this is kind of where it starts, right? Is like, where's the line for me? Like for me, I'm like, if it's not a business expense, it's not a business expense. That's it, right?
Mm-hmm.
Like I know people that literally never go out to eat. They'd get a receipt anywhere they go, whether they're with their family, they're on vacation, whatever. And every single business receipt is a business meal. Like, like I'm not comfortable with that. I don't think that's honest. I don't, at the end of the day, are they saving money? Sure they are. But are they like, how much sleep are you losing over your conscience, right?
Yeah.
Like there's a cost to dishonesty, right?
Yeah.
Like whether you get caught or not, there's right and wrong. So but this podcast isn't about lecturing you. It's about educating you, right? And so, these are these areas and these slippery slopes, and people like do anything that they can to keep from paying the government. And first off, I'm going to tell you, I don't like to pay taxes, right?
Mm-hmm.
Necessarily. It's not my favorite thing to do, but I'm proud of the country that I live in.
Yeah.
And I'm proud that I make money to pay taxes.
Yeah.
Right.
Mm-hmm.
So would I rather my money go elsewhere? No, but when I write a big tax check at the end of the year, it means I made money. It means I did good, right? And and I live in a great country that affords me great opportunities and protects me and protects my freedoms and gives me great roads to ride. So like we have to have the right perspective, right? So again, this isn't about lecturing or anything like that or making people feel guilty, but I do think as an entrepreneur, you have a moral obligation to make sure that you're not cheating the country that has provided very, very well for you, okay? So, you make that judgment call. You have black, you have white, and you're doing things correctly, okay, or incorrectly. So that's kind of the one place that it starts. The other place that it starts, and I see this happen all the time, is when all of a sudden, your personal bank account needs money. Like we were joking earlier, like time to go on a vacation.
Yeah.
Right?
Yes,
Like,
yeah.
You're like, oh, I really want to go on vacation. This kind of popped up. I need a vacation.
Yeah.
And it's going to cost $5,000. And our personal bank account does not have $5,000. It has $1,000 in it. But golly gee, our business bank account has $10,000. I'm going to take that $10,000 out right now and pay myself $10,000. Okay. I already take a salary.
Yeah.
Right. I already take a salary. So my company already pays me a salary. And let's say that salary is $5,000, but I've already spent that, right? Because I've taken the salary. Now I'm saying I'm going to take a draw of $10,000 and I'm going to pay that, which technically you can do that. You can take $10,000 out. But like just because your bank account says you have $10,000 doesn't mean that your financials, you truly have $10,000 profit.
Yeah.
Like you do this a few different times when you shouldn't. And next thing you know, you all of a sudden, your company has bills to pay that can't be paid. Right. And so you're taking money out that's not truly profit. It's just your bank account has excess. So why would that happen? So this is very common with contractors. Contractors get themselves in issues all the time. Why? Well, because they start a big project. And in order to start a big project, let's say they're building, let's say they're doing a backyard. And they're going to do your backyard, and it's a $100,000 backyard. And they're going to take 30% up front, or as much as they possibly can up front, right? Because they always want up front. So let's say they say, we're going to take 30% up front. You write them a check for $30,000 and you hand it to them. They bought no material. Mm-hmm. They've not paid any of their laborers, right? Mm-hmm. And all of a sudden, the end of the month comes around and that $30,000 is sitting there. Is that profit? No, it's not. It's not profit. But the bank account shows it as profit. Mm-hmm. Also, you have months sometimes where you get these lump sums, but also you have some months, in personally, your bills become very predictable. Mm-hmm. Like they're predictable. Like, probably next month what your mortgage is, right?
Yeah. Yeah. Mortgage, car payment, children's sports.
Yeah, pretty predictable, right? Like the unpredictable stuff you generally have control over. Like, I'm not going to say a medical bill. Those things can sneak up on you, stuff like that. But like something unpredictable, it could be a vacation, like we said. But you can choose to say no, right? Like, but the unpredictable stuff in business, you don't get to say no to, right? Yeah. Like all of a sudden you get to the end of the year and you realize, and this is where people get killed. I haven't paid any of my taxes. Mm-hmm. And I'm not talking about just like your taxes on your profit. I'm talking about, let's say you collect sales tax. Mm-hmm. So you sell something for $1 and you collect $1.10. Uh-huh. Well, that 10% in sales tax or whatever goes into your bank account. The IRS doesn't automatically take that out. Mm-hmm. You have to take that money out and make those quarterly payments or that annual payment or that every 6 month payment. That money's sitting there. You're going, hey, I'm 10% more profitable than I thought I was. Yeah. No, you're not. That's tax that you owe the government. Mm-hmm. Like that. So like there's these things that like are just different on a business side than on a personal side. And on a business side, you'll have stuff like software. Software is very expensive. You could have a $20,000 bill. Like typically in most of the time in your personal stuff, you pay stuff monthly. Mm-hmm. But in business, it's like, I all of a sudden have my Salesforce, because you have everything in Salesforce. I have my Salesforce bill coming up due in January, and that's $20,000. I didn't plan for that, right? Because I'm used to making payments every month. So some months you have less bills than you do other months. You get deferred lease. Like you move into a new building, you don't have a lease payment for 3 months. All of a sudden you think this is your baseline, your base expenses are way less than they actually are. Mm-hmm. And so, or going back to the contractor, right? Like all of a sudden you had this $30,000 and you spend that on another project. Mm-hmm. Now all of a sudden I'm saying, hey, how come my backyard's not getting done? Yeah. And they realize I don't even have money to go buy, the stuff, the concrete that I need to do for this guy's backyard. Mm-hmm. So what do? They go get another job and they try to get someone to get the $30,000 payment to come pay for mine, right? And it's just this cycle. I call it like the snake that eats its own tail. Mm-hmm. And that's what happens when you start commingling funds. You lose track of the reality of your financials because you're living off of your bank statement. And then, your wife comes to you and says, hey, the kid needs braces. We need this money now. And so what do? You reach in again and you reach in again. And now the end of the year comes and your accountant says you owe $30,000 in taxes. And guess what? You're not only do you not have that $30,000, you actually can't even make your current bills. Mm-hmm. And all of a sudden you went from like thinking that you were just on fire at business to like this negative like tail, like, so you go and get another job and now you get someone else to pay you. Eventually it catches up. Mm-hmm. And I use contractors, but everybody has the same type of issues, right? And so making sure that we draw these lines is so incredibly important. And my best advice is do it today. Like if you're starting your business, start your discipline today. If you've never done it that way, well, today, November 7th, 2024, right now is the day you're going to do it, right? Because the best time to plant a tree was 20 years ago. Mm-hmm. Second best time to plant a tree is today. Like you have to do this today.
Yeah.
Like you have to get control today, because what happens is people think, oh, no, I'm going to get ahead of this thing. It's almost like a gambler in Vegas. Like I'm going to get ahead of this. I'm going to get ahead of this. I'm going to get ahead of this. And you end up putting yourself more and more and more of a hole. So you have to say no. And starting today, you have to get disciplined.
Yeah. So it really becomes the mentality we have when paying bills or budgeting for our own life is not what you can take in business. And you've really got to separate that and think of them as two different entities.
Absolutely. They're different. You're typically in your personal life, the bills come consistently, your paychecks come consistently. It's a good groundwork. I'll tell you this, when the bits of advice I give everyone is like, when they're talking about starting a business, is I'm like, well, what are your personal finances like? And they're like, oh, I'm late on a few bills, or but I have like a 500 credit score, but it's getting better. I'm like, don't start a business. Don't. Like, if you can't I'm telling you right now, if you can't run your personal finances, do not start a business.
It just makes it that much more complicated and harder.
Right. Like right now, you're going to get kicked out of your apartment. You start a business, the IRS is going to, hey, how about some jail time? You know what I mean? Like you are dig yourself a deeper hole. Like, get your personal finances in order. Because if you can't run your personal finances, which are very predictable, like there's no way you're going to run business finances. But yeah, that's the problem with business finances, is it's lumpy. The expenses are lumpy. The income's lumpy. And we haven't even talked about bad debt and people like slow paying you, right? Yeah. So imagine you're trying to pay your bills and you're like, well, geez, I should have $100,000. Where's it at? Where's it at? And because you're looking at your financials, then you realize, oh, all of that is spread across 10 customers that are behind on their payments. And one of those customers just went bankrupt. And I'm not getting that money. Yeah. Like, I'm not getting that. It's a different level of complication that takes extreme discipline. And if you commingle, it just becomes confusing.
What would you say to me if I'm like, Devon, this is all great, but it's my money?
Yeah.
I can do what I want with it. What would you tell someone?
I would say it is your money, but get discipline around it, because it's two different pockets, right? So if you think about it, it's like, yes, it is your money, but what you need to do is you need to actually understand what's in this pocket. The people that are oftentimes drawing the money out, they don't understand what their true profitability is. And so they're taking out of one pocket, putting in another pocket, and that pocket spends it, right?
Yeah.
But the pocket that they think they're taking out profit because they say, this is my money. Actually, no, it's not. It's 30% down payment for a job that you haven't done, right? It's not your money. Your money is the profit that's left over afterwards. And so what happens is people go, well, I am profitable because my bank account says I have this money in it. No, your bank account at this particular time, on this particular day or whatever, is in a surplus. 3 weeks from now, that could be a negative, right? So how do you know what truly your profit is? It's your financial statements. Like, you have to make sure that you understand your financial statements. You're up to date with them. You have a bookkeeper, an accountant, or whoever's doing it for you that's competent. And then honestly, if you've been doing this for a while and you're like, Devon, you're right, I'm going to get disciplined today. And oh, great, you did your financial statements. Well, and you go, hey, I did my financial statements. It says I have 40 grand profit, so I'm going to pull that out. No. Remember, you haven't done them forever. Yeah. So you kind of got to let it roll out. Like, you've got to let 12, 18, I'm going to say at least 18 months kind of roll through. So that you kind of get caught up on everything. Yeah. And the pluses and minuses start to level off, and you can understand your true profitability. Because again, just because you start your financial statements today and it says you had a profitable quarter, well, don't forget you got the rest of the year, right? Yeah. Plus you got some other bills sneaking up on you, right? So you have to let that play out. And so what I've done and what I tell people to do all the time is, once you know you're moderately profitable, take a paycheck, and that's it. That's it, period. And I mean, I'm talking like your minimum paycheck. Like, don't go take a big paycheck. Like, be disciplined. And here's the thing. I don't want anyone to think I'm against making money. Yeah. Like I went into business for two reasons. One is I wanted to make a lot of money, and I'm not afraid to say that.
Mm-hmm.
The second is I wanted to control my own schedule.
Mm-hmm.
Those were the reasons I went into business. I never apologized for making money, right? Like, and I don't think anyone else should either.
Yeah.
But I think they need to be shrewd with what they're doing, right? And so, anyways, my point is, in the beginning, pay yourself a minimum salary, not a generous salary, a minimum salary. Be disciplined. Be frugal. Let that 18 months play out. Okay. You're just taking a minimum salary for 18 months. It's 18 months of your life compared to the rest of your life, right? Pay yourself a minimum. Let it play out after 18 months. After 18 months to 2 years, you're going to know what your true profitability is, right? After 18 months, you may say, hey, I paid myself this salary of $60,000 a year. I've been living off of peanuts, but now I truly know what my profitability is. And it says that I made $150,000. You're like, great, I'm going to take $150,000. No, not yet.
Yeah.
What I recommend is now take half of that out. So take $75,000 out and then take a distribution of that $75,000. Put in your bank account, continue to live frivolously, or not frivolously, frugally, the opposite.
Yeah.
And let that play out. And now as your business progresses, and as you really truly start to understand your financials, because it takes a while to understand them, and it takes a while for the whole thing to shake out and for a reality to actually prove true, then maybe you don't have to wait an entire year.
Yeah.
Maybe you could do it once a quarter. You could start taking dividends. And then maybe after like 3 years or 5 years, maybe you could start taking dividends monthly, right? And maybe instead of 50%, maybe you could take it to 75% of your profit, right? I don't ever suggest you take 100%, but maybe you could take it down to 75%. Remember, and also part of this is you have to be squirreling away for taxes.
Yeah.
I say all this because I learned these lessons the hard way, folks. I learned these, believe me, there was a very uncomfortable month or two in my life when I had forgotten about that whole giant tax payment, right? I'm telling you guys, learn, right? And so these are the things to be considered. And as you're doing this, like I said, I don't want you to apologize for making money. I have people talk to me all the time like, oh, Devon, well, I'm not really in it for the money. I'm like, I am. I'm like, you don't have to apologize to me. I'm in it for the money, right?
Yeah.
I don't work my butt off and do all this stuff to like I want to make a lot of money. So, I'm not telling you to apologize for making money, but I am telling you that the Bible says that he who loves wine and oil will never be rich. Let me translate that. Let me translate that language from, Proverbs and biblical times to today. Today it means he or she who loves first class tickets and Gucci will never be rich, right? So even once you take it out of the business and put it into your personal finances, remember, you're still setting yourself up. You're still investing. You don't have to spend it all. Diversify. Once you have that in your personal finances and you've done it correctly, now remember, you are basically living your entire livelihood off of one stock, if you know what I mean, right?
Yeah.
Like that stock is your company, right? Imagine putting all of your money into one stock. No financial advisor would ever advise that ever in a million years, right? So once you take that money as a dividend or a draw, whatever your accountant calls it, and you put that money in your personal account, now don't go spend it all. Now use some of that money and diversify it into other investments. That could be the stock market. That could be real estate. That could be simply savings. That could be other companies, right? But once you have that, don't even spend all of that, right? Because he who loves wine and oil will never be rich. If you want to be rich, this is what you do. You use your money, you invest in it, you put that money to work for you.
What about real world examples? I'm sure there's people, who listen and are like, yeah, this is all good, but it won't happen to me. I'm smarter. I can figure it out. Have you had what real world examples can you tell me about that?
Yeah.
person probably had the same idea.
Yeah, I've had friends that literally at 10 o'clock at night, vendors show up on their doorstep, banging, screaming, police getting called because they commingled their funds. And when it came time to pay their vendors, they didn't have the money. I've had not too long ago, I owned some commercial real estate, and I got an email. That said, hey, is it okay if we're 1 week late on our rent because we had some personal stuff come out? And I'm like, oh my gosh, they're commingling their funds. I know this is going to be the snake that eats its tail. I'm going to have to evict these people. Sure enough, 90 days later, they're not paying their rent. They're going to be out of business. So I see this, and when I tell you, Lauren, I see it all the time. I see it all the time. And it's oftentimes not malicious. Yeah. I don't think any of these people do this maliciously. I think there are definitely people that play the line, the earlier part that we're talking about. Mm-hmm. And I'm telling you, I think that's a slippery slope. I don't think it's honest. Mm-hmm. And I think not being honest is lying.
Yeah.
And that's wrong. But, people start playing that game, and then they start drawing down stuff or drawing down money from their personal, because it's real life stuff, right? Mm-hmm. The kid really does need braces.
Mm-hmm. Yeah.
You really want to pay for braces. And so, these are real life situations. Your kid needs braces, and you want them, you want to be a good parent, right? You're working hard and you're trying, and you're like, hey, like you said earlier, this is my money. The question is it your profit? Mm-hmm. Is it your profit? And so that's, understanding, because if you pull it out and it's not truly profit, it's going to come back and bite you in the butt. Mm-hmm. And again, if you haven't paid taxes on that profit, you have to plan for that too, right?
Well, let's say using that as an example, let's say I'm a business owner. I'm not commingling funds. I'm paying myself a responsible salary. I'm keeping, 75% of my profit in my bank, and my son does need braces, or something unexpected happens and we do need more money. Is there ever a situation like that where you'd say, yes, go into your business's profit and use that? And if so, what's the responsible way to do it?
Yeah, great question. If you have your books up to date, your financials up to date, and it's profit, yeah, you can do that on occasion, mm-hmm. right? Be disciplined, and remember, it's a slippery slope, because once you do it once, you might be tempted to do it again, right? But yeah, I mean, this is about getting your financials in order and understanding your profitability. Once you understand your profitability, I become a lot more comfortable saying, yeah, go ahead and do that. But remember, people, that it's your financials, not your bank account. Because I think, if I haven't said this before, I'll say it now. Your bank account will lie to you in business. Mm-hmm. If you just look at your bank balance and go, that's my profit, wrong answer, right? Mm-hmm. So, Lauren, what I would tell people is, and you're like, well, yeah, but I need to do it now. Okay, well, now you have the motivation to get your financials done, right? No, this is an emergency. Okay, well, you've just highlighted the fact that it's an emergency mm-hmm. to get your financials done.
Yeah. Do you recommend any of the programs like QuickBooks or anything like that to help out with that?
Yeah, absolutely. Here's the thing. We don't have an excuse in 2024, 2025. We're at a point in time where this stuff has been dumbed down for us. Mm-hmm. Software is made, you don't have to be a CFO. You don't have to be an accountant. All you need to do is say, oh, this is an expense, plug it in. Mm-hmm. Oh, this is an invoice, plug it in, right? Put the information in there. When is it due, right? We put this is not, when I'm sure people are crazy intimidated, right? Mm-hmm. And here's what I'm not telling people. I'm not even telling you go back and recreate the last 5 years. Mm-hmm. If you can, great. But what I am telling you is start today. Mm-hmm. We'll talk, we can deal with the 5 years later. The accountants and people like that can deal with the 5 years later. But if you start today, moving forward, this stuff will catch up with you, right? You're going to catch up. The tax bills will catch up with you, right? Mm-hmm. These lumpy payments, lumpy, expenses, lumpy, even revenue will catch up with you. But if you don't start today, you'll never get to that 18 to 24 months. And so if you get something like QuickBooks, anything, I mean, we're talking, I think QuickBooks can do this for like $60 a month or something. Like, this isn't going to break the bank. You don't need to be a genius. You just need to be diligent to do it every day or every week, right? And then begin doing it moving forward, and eventually you will know the truth, right? Like, and like I said, even the skeletons in the closet, they're going to come dancing out in the next 18 months. Like, you're going to discover those skeletons like, oh my gosh, I forgot about this tax bill. Oh my gosh, I forgot about this, vendor that I still owe, right? Like, those, they're going to come knocking on your door. And so that's going to come out, right? But if you don't do it today, you're never going to do it. Like, and I used to meet with someone, he'd be like, hey D, can I meet? I want to talk about business. And so I would tell him all the time, I'm like, okay, well, the first thing you do is your financials. And he'd be like, yeah. But I think what he was waiting was for an abracadabra word, right? That I was going to tell him something that was going to make all of his problems go away. And what I was telling him is, you need to do your financials. Then we met like a few months later. Hey, I want to meet again and talk about business. I'm like, he wants to talk about business. I'm like, oh, great, where are your financials? I'm like, I'm going to tell you the same thing I told you last time. You need to do your financials. And then a few months later, and literally this went on several times, and he's a good friend of mine. So I'm like, I want to meet with him. The last time I told him, I said, I won't meet with you again unless you have your financials done. And I've never met with him again. Right. And it's not that he's not capable of doing it. It's just that he has not been disciplined. And so I'm telling you, like, dude, like, go work for somebody. Like, if you know that you don't have the discipline to do this, keep your day job. Don't start a business. I'm telling you, like, this is where it's a hard no. Like, I'm a hard no on this. Like, if you're not disciplined with your personal finances, and if you know you won't be disciplined with your business finances, don't do it, because you'll die because you'll have a heart attack.
Or you'll be killed.
Killed. Your vendors will come out and they'll put you in a ditch.
Lesson to take from this: it's never too late. If you are commingling funds, whether to a great value or a small value, stop it, start today, and it will get cleaned up, right?
It will take some time. It will be painful. And you might even have to reduce your salary during that time, right? But at least you'll be living in reality, because there will be a price to pay. It does not go on forever. Like, you're like, well, I've been living like this forever. And, sure, it's stressful, but no, it will catch up, and it will destroy you in some fashion. And you just have to it's not a negotiable.
Sounds good.
So anyways, I hope this is helpful, not discouraging, but encouraging. I know it's a tough subject, right? Like no one wants to hear that they can't write off their boat, right? And again, like I said, I'm not here to be the morality police, but I am here to help you reflect and like make hard decisions in your life, because at the end of the day, like, you want to be proud of who you are. Like, when you put your head on the pillow, I always tell people, when I put my head on the pillow at night, my goal is to be right before God and man, right? And so when you do this, you're going to, you might not have the same, you might pay more in taxes, but you're going to be right before God and man. And if you begin doing this right, these next 18 months to 2 years might be brutal, right? Because you used to just steal from Peter to pay Paul, and all of a sudden you drew the line in the sand, and now, like, you're not taking home anything, and you have to have hard conversations with your spouse and your spending habits and all of these things. But 24 months from now, you're going to be able to live a life that you're proud of. Your stress is going to go way down, and you're actually going to know whether you're profitable or not. And if you don't do this, it's going to explode anyways. So, like, you got to do it. Yeah. So anyways, this is meant to be encouragement. I know it's a hard topic. Probably, we probably had thousands of listeners at the beginning, and now we're down to like 10% of them, right? Hard topic, but it's a truth that needs to be told, and that's what I'm here for. So I hope it helps.